Let's expose the dirtiest business loans. Look, a lot of loans out there aren't dirty necessarily in the business space, but let's be honest, a lot of lenders are. There's a lot of things you have to look out for to not get into predatory lending where you're paying outrageous interest rates, short terms, and you have really high payments for borrowing the money you need to grow your business. Look, I want you to get the money you need to grow your business, but I want you to get the right amount of money from the right lenders and funding sources and not get caught up with the dirtiest of them in their nasty funding traps. So let's keep you out of the nasty funding traps. In this training, I'm going to decode what you need to do, what you need to avoid, and how to find the clean lending that you want, avoiding these dirty lenders. We got a lot to cover, so let's dive in. So first of all, as I said, the key here is to get money for your business and do it through not the dirtiest of lenders and loan programs. And what I mean by the dirtiest is the ones that have like predatory type terms. Their interest rates, their fees are outrageous, their terms are short. They give you money that you may never even be able to pay back, but you may be so desperate that you may actually jump on that. You don't want to do that. There's all kinds of solutions where you don't need to work with these dirtiest of lenders. So let's dive in and talk about what causes them to be dirty and what to look for. So first of all, we want to look at the rates, we want to look at the terms, and we got to be careful here. Look, since about 10 years ago, we have all these fintech alternative lenders pouring into the lending space. And a lot of them will lend to business owners that typically couldn't get financing before. So I oftentimes say it's not a bad thing to pay higher interest rates. Higher interest rates mean you're probably higher risk. And if you want to get lower and better terms, well, then you need to lower your risk. So let's look at some factors that affect your risk. How long you've been in business for, the quality of your consumer credit, the quality of your business credit, the industry you're in. That's something you can control, for example. So you can go to NAICS.com to find the right industry for you. And when you apply for credit and financing, make sure that you're actually using that term and your actual NAICS to get approved. Before you do that, Google high-risk NAICS codes and avoid being seen as in a high-risk industry. Now, if we look at these things, we address our personal credit. Our personal credit scores are better. Our business credit's established. We start gaining some time in business as well. When we do all of these things and combine them, we manage our bank accounts responsibly. We start filing taxes and we have profit on our tax returns. All these things help lower our risk and get better terms. So just because you pay a higher interest rate doesn't necessarily mean that you're dealing with a predatory lender, but it's a first sign to look out for. If you're paying 30, 40, 50, 60% interest, should you be paying that? Well, now you know the risk factors, and if you're in those low risk categories, you shouldn't be paying that. For example, we've secured high risk financing at 8% interest when other people pay 50% for that same financing. So again, the reason for that is that even though it's high risk financing, meaning it's fast, easy money like revenue lending, our risk factors were low. My personal credit was good. Our business credit was established. We managed our bank account responsibly. So again, know the risk factors, control them. That will help lower the rate. But keep an eye out for ridiculously high interest rates, because if your risk is lower and your rates are really high, that's a good indicator that you're working with a very predatory lender, one of these dirtiest that we want to avoid. Now, we also want to look at fees. Are they disclosing all the fees? If they're telling us about their fees and their X, then we see their documents and their Y, and they're very different from what they quoted us. It's a really good way of knowing that we're working with a dirty lender. So what they tell us up front should match the actual income documents or the actual documents that they have us sign and the actual deal that we really get offered. If those are mismatched, it's a really good indicator that you're working with a very unethical lending source. And that brings me to something called APR. I love APRs in finance because they simplify for us what we're actually being charged. See, APRs, or annual percentage rate, really take into account the interest we're paying and the fees that we're being charged. See, sometimes these dirtiest of lenders will actually show us lower rates but ridiculously high fees, or low fees but ridiculously high rates. And they try to mask one to hide the other. Well, APRs can't do that. APRs take into account the actual rate and they take into account the actual fees. So in one number, we can get a really good assessment of the actual type of money that we're being charged, and ridiculously high APRs show that one or both the interest rate or fees are high, and it helps us spot these dirtiest of lenders. Now, another trap you can get caught into and when to recognize the dirtiest of lenders is called prepayment penalties. Look, you should be able to get into financing and in most cases get out of it without paying a penalty. So one good indicator that you're dealing with a dirty lender is if there is a prepayment penalty attached. Now, don't get me wrong. Again, none of these things individually mean that you're working with the dirtiest of lenders, but they are signs to look out for, because if any of these things exist, it makes you do a second take. And if all of these exist, well, there's a really good chance that you're working with one of the dirtiest of lenders. They're trying to put you into financing and then not even get you an option to get out. So remember, in almost all kinds of financing, there's lenders that will require a personal guarantee and the ones that don't, and the ones that do often fall into that dirtiest category. So make sure you actually get a comparison between lenders so you're not actually getting a prepayment penalty and you're not locked into these high-risk terms and don't have the ability to get out. Another way to avoid the dirtiest of lenders is just look at reviews and testimonials, right? We've got the Better Business Bureau, and I don't look a lot at the grade that the Better Business Bureau gives you because to me it's kind of fake, it's kind of bogus, meaning that if I pay to be accredited with the BBB, I'll automatically have an A+. I could sometimes have 30 complaints and still get an A+ because I'm paying the BBB money. I actually personally like to work with companies that are not working with the BBB and that are not accredited, because if they have an A or an A+ rating and they're not accredited, they earned that, they didn't pay for it. But again, the BBB will at least show you complaints that have been filed against that lender. An online search of the lender's name and reviews will give you an idea of reviews. Don't just look at 1, 2, 3, 4, 5 stars, but actually look to see, did they leave a comment, and does the comment really look like a comment from a real person? Look, nowadays, it's really easy to buy fake reviews. So ways you can spot that is there a lot of reviews in a very short period of time? Or are the reviews you're looking at kind of consistently stable over time? Maybe they're months or years where people are leaving regular reviews at sporadic intervals, right? The reviews should make sense, and they should say different things between the actual reviewers. The reviewers, you can oftentimes click and see how many reviews they've left. A lot of these reviewers should be leaving other reviews. Okay, if you've got people where all the reviews are done in a week's time, right? They got 30 and they're all in 1 week, and they're all exactly the same amount per day, the reviews don't make sense, and the reviewer hasn't left many reviews, well, these are indicators of fake reviews. So find real reviews, and is that a good reflection, or is it a positive reflection of what that actual lender's doing? And do they have testimonials? Do they have case studies? A lender that's lending a lot of people money should have access to case studies and testimonials that speak to the results they're actually delivering. So these reputation, just by looking at places like Trustpilot, by the BBB, by Google reviews, by making sure the reviews are legitimate, by finding testimonials, case studies, these will give you really good reflections that you're working with a credible business and not one of the dirtiest lenders that's out there. And we really got to avoid absolute red flags, right? Absolute red flags are they don't have an online presence. All they have is a website. They're not listed in any other directory. You can find very minimal information about that actual source, okay? Another red flag that's clear is they don't have any social media presence at all. Maybe they have those social links at the bottom of their website. You go to them and nothing's there. The pages are dead. Or there's no actual posts on the pages. Or the posts on the pages are negative. There's people leaving negative review and negative feedback there. Look, a legitimate company nowadays has a social media presence. They're posting regularly on at least one, if not multiple of their social media channels. They're getting engagement from their true fans on their social media channels as well. Their postings are recent. They're not old postings that we find on there. These are all indicators that we're probably dealing with an established lender. Okay, I got an offer the other day on TikTok and I loved it. I was like, I love these shoes. They're awesome. But the source that was selling them I'd never heard of before. When I Googled the name of that source, I found no reviews, no information about that source beyond their website. I thought it was sketchy. I didn't buy them. But I loved those shoes, so I went back weeks later, clicked the link, and it wasn't there. The website wasn't even there. It didn't even exist. And if you would have seen this website selling thousands of items, there's no way you'd think that somebody would put that up as a fake website. That's exactly what it was. It was a phishing expedition to get money from people, and they're running legitimate ads. So you got to be be careful nowadays, and by doing a little bit of research, looking at reviews, looking at feedback from other sources, looking at social media channels, I was quickly able to see a red flag and avoid making a bad decision the same as you can, and to help you avoid working with the dirtiest of lenders. So how do you find the clean ones? How do you find the best lenders for your business? Well, give us a call. We can help you with that. We'll actually do a free finance assessment for you that will walk you through fundability and make sure your business is structured the right way where legitimate good lenders want to give you money. We'll actually do a finance assessment to tell you all of the funding you can get right now. We'll talk to you about all the funding options that are available. And if you like any of those, then we can even recommend the best lenders in those areas. We can even get your business credit reports for you at no cost, review those, and even give you tips and tactics to fix your business credit as well. You can get this free finance assessment by giving us a call at 877-600-2487, or you can email us info@creditsuite.com or schedule online at creditsuite.com/consult. Did you get value from this training? If so, make sure you like and subscribe and turn on the notifications icon on YouTube as well. Then you'll be notified whenever we release this kind of training on how to get the most money for your business. And you'll get notified when we go live. And when we go live, we can actually take your questions live in our training and even talk to you about your individual situation to help you get the most money to grow your business. So make sure you like and subscribe, and I look forward to seeing you on our next training where we talk about more cool ways to get the money you need to start and grow your business.